About 3 months ago, I decided to fund 2 accounts with Torex. The first account I funded $200, and the plan was to try and swing that account up until I reach $1,000. And the second account I funded $250, and the plan was to try and scalp that account up until I reach a maximum of $1,000. The first thing we're going to talk about is that the best trades are found on strong zones. After getting the overall direction of the market, the daily time frame is the one that you should use to get your sensitive areas, of which in simple terms we call them support and resistance. The main question is, how do I spot the daily zones? Using candlesticks. This is where your daily candlesticks come to rescue you. Mark your sensitive areas using the body of the candlestick, where the body closed of the candlesticks, not the remaining wick of those candlesticks. Second, and the most important lesson, is that you should always trade setups, not money. I know sometimes we might feel like, okay, I've held this trade for a long time now and I've made enough, but you have a take profit for a reason. We always analyze for the entry point, the stop loss point, and the exit point. So make sure that you hold your trades up until you reach that take profit point. Unless if maybe, because there are some times whereby we'll be holding trades for a long time and then end up losing confidence over that certain trade. You can close that trade manually if you feel like you are losing confidence on that trade. But beside that, you should hold that trade up until it reaches your take profit point. And when it comes to your stop loss point, keep your stop loss point constant. If you want to trail your stop loss, trail it in a way that the market will be able to breathe. Don't just put the stop loss up and you leave not enough room for the market to breathe. The third lesson, it is preparation. We always analyze every time before we enter the market, and the main purpose why we analyze it is to get the entry point, obviously the stop loss point, and the exit point. We have the risk reward ratio in the top of our heads, but we don't know in terms of amount or in terms of money, how much is that amount that I'm willing to risk or gain. I use an app called Short Pip Calculator, of which you enter your entry point, your stop loss point, your take profit point, the pair that you are going to trade, and the lot size that you are going to use. What that app does, it is to calculate how much will you gain or how much will you lose. Let's say if a trade goes to your stop loss, it will calculate how much in terms of dollars will you lose, or when the trade goes to your TP, how much will you gain in terms of dollars. I find it very useful, that app, because you get to know how much you are willing to gain and risk even before entering a trade. The second last most important lesson, it is journaling. So most people think that when you journal your trades, you should go all this complicated stuff. The only thing I do is take a screenshot of your setup before the trade and then after the trade. Just write a short summary of why did you enter that trade. For an example, you can just write AUD USD, I entered because of a break of structure. Second, maybe a candlestick confirmation. And then thirdly, we are on a strong zone. As simple as that. You don't have to write a paragraph of whatever that is going on. I have a trading room of which I share my analysis with my students. I used to do signals, but I no longer do them because I felt like they put me under pressure of me trading every day, where else my strategy allows me to hold for a couple of days. I use my Discord group to journal my trades, and in that trading room I have a catalog of which has the before and after setups. The weekend before I take trades, I analyze and then send those charts into my analysis part in the trading room. After that, a week passes. I take the screenshots of the trades that went according to my anticipation, then send them into the before and after so that we can see the before the trade and then the after the trade. In a case of, let's say I'm analyzing in a month or two and then I see a similar setup that I've seen in the past, I will be able to go into my Discord and then look at the before and after trades and then try to capitalize on the current trade. The last important lesson, it is the 90% rule. Always know that the market covers 90% of its previous correction. When you see some kind of a bearish trend, just know that there is a possibility of the market breaking out, obviously, and then covering only 90% of that previous correction before the breakout. I think this is important because most people use zones for their take profits, and most of the time the market rejects even before it gets to those zones. So please be careful of the 90% rule, and then I will show you how I was able to maneuver around that rule.